Now let's move on, switch gears and talk about some revenue recognition issues. First issue, again, we talk about corporate wrappers here. Here, if a company sells a corporate wrapper to a customer, does it apply? That, for example, if it sells goods that it typically sells in its normal course of business, except it sells the goods in the form of a corporate wrapper, so that so the company holds the good in a subsidiary and sells that subsidiary to a customer. Would the company apply HKFRS 10 or HKFRS 15? So sometimes this may be done for various different reasons, and usually is for tax purposes. Why companies have done this to sell something that they would sell in the normal course of business in a corporate wrapper. So this would be dependent on the specific facts and circumstances, and would require significant judgment on whether what it sells is just simply goods that they sell in the normal course of the business, or is it really, are they actually selling something that constitutes a business? And in practice, some entities actually apply HKFRS 15 to all these contracts, that because they view that's the substance of the transaction, and they're actually selling goods that they normally sell to their customers, except all they did was they just put it in a corporate wrapper. The ISB actually considered to make a narrow scope amendment such that an entity would apply IFRS 15 instead of IFRS 10 in certain types of situations where the sale of the subsidiary only holds goods that the entity typically sells in the normal course of the business. It was supposed to be a very narrow scope amendment, and the ISB ultimately decided not to make the narrow scope amendment, but it's something that they may be considering for the second phase of the post-implementation project of HKFRS 10. Another issue is how does an entity account for equity instruments that it issued to a customer as part of its revenue arrangement? Is that within the scope of the revenue recognition standard? This would be dependent on the substance and purpose of that transaction, because HKFRS 15 actually does not specify whether equity instruments that are issued to a customer is considered part of your consideration payable to the customer. And HKFRS 2 does not really address these transactions because these are not share-based payments for a good or service. So to account for these transactions, an entity may have to consider whether to apply several standards or a combination of these standards, including HKFRS 2, HKFRS 15, or even HKAS 32. Different from IFRS, the FASB actually made an amendment. They realized that this is an issue, and they actually made an amendment to ASC 606 to clarify that equity instruments that were granted to the customer in conjunction with a sale of goods or services would be within the scope of ASC 606, and you would account for that as consideration payable to the customer. Exclusivity provisions. It's something that we've seen pretty often. The entity may agree to only sell to only sell specific goods to a customer, so that this is an exclusive agreement between the customer and the company. Or in these situations, would the exclusivity provision represent a separate good or service that was provided by the company to the customer? Generally, it wouldn't. If we think back to the exclusive licenses under HKFRS 15, would say, the exclusivity of a license is an attribute of the promise to the customer, and it's not a separate good or service. So similarly, the same would be applicable for exclusivity provisions for non-license arrangements. So this is the exclusivity is just an attribute of the promise to the customer, not a separate good or service. So if the customer actually pays the company an upfront fee relating to the exclusivity provision, then the company will have to consider whether that represents a material right to future goods or services. And any payment that the company makes to the customer would need to be valued under the consideration paid or payable to the customer guidance in HKFRS 15. Should volume rebates and or discounts on goods or services be accounted for as variable consideration or as customer options to acquire additional goods or services at a discount? This would be dependent on whether the rebate or discount is applied retrospectively or prospectively. So generally, if the volume rebate is applied prospectively, so the company offers discount on future goods or services that are purchased by the customer, this would typically be accounted for as a customer option. So you consider whether there is a material right relating to this discount on future goods. If the volume rebate is applied retrospectively, for example, if a company offers the customer, well, we'll give you additional discount on all the goods that you purchase, including the current purchases that you make. If your volume hits a certain target, then this would be considered variable consideration because it actually impacts on the consideration of the current purchases as well. Lastly, master supply contracts. Are master supply contracts, are they a contract within the scope of HKFRS 15? Usually they won't be, because usually on your master supply contracts, you would only specify the pricing and the payment terms, and it would not include the number of goods or services that are being sold to the customer. So usually the master contract on its own would not constitute a contract within the scope of HKFRS 15. So instead, the master contract, along with the customer order, will be a contract within the HKFRS 15, because then it specifies the number of goods or services that is actually being purchased by the customer. And if the master supply agreement actually includes an enforceable clause which requires a minimum amount of purchase from the customer, in that case, then the master supply agreement would constitute a contract under HKFRS 15, because here then the contract would specify pricing, payment terms, and also the amount of goods to be purchased, which would be the minimum number of goods.